I've got a customer one time who came up to me and said, "Hey Sarah, I wanted to buy my first home. I would like to buy my first home." So I said, "Sure." I've discovered with that customer that she had a car loan
Yeah.
and she had a personal loan
Yeah.
and she also had a credit card.
Okay. All right. Hello and welcome, Sarah.
Hello, thank you.
Sarah Lee, CS Duo, a mortgage broker.
Yeah,
It's a new setup.
Correct.
You've been in the industry for a while,
Yeah.
but now it's on your own. You're out there meeting clients and helping clients with their
100%.
property and finance.
Yes.
If you want to just give me a little bit more about that, why you got into the industry, where you're at with things, and then, we'll keep the conversation going from there.
Yeah. So I was in the finance industry for about 9 years.
All right.
And I started from being a bank teller
All right.
to all the way to the corporate. So, so having that experience, I think it made me realize that there's a lot more to it than just sticking with one bank, right? So, and plus I'm a property owner myself.
Good.
So after doing some research and get to knowing people, it actually gives me an insight where there's actually more that I can help towards the customers.
Yeah.
So, yeah.
Yeah, so I find that once you're in the property game yourself as a mortgage broker or a real estate or whatever, it gives you a different perspective.
100%.
Even, one of the staff members is a property manager, and I saw the different change, like a huge change in the way she approached property management from the time she became an owner versus... You know what I mean? Because this is how I want to be treated. So a personal experience and a personal touch is very, very important.
It's super important because I think when everyone wants to try for a home loan, what happens is that they get very emotional.
Yeah.
And it's mentally really draining for customers as well, because with all the documents, what's involved, the numbers, everything. But having to say that I'm a property owner myself, I know the process and I understand what's going to happen.
Yep, step by step.
So I think delivering that to the customer and also understanding their position as well, that's more of a personal touch.
It is.
So I think that's how I've been able to consistently have that relationship with the customers.
That's good. That's really good. On a personal note, you've got daughters.
Yes.
You're into JDM cars.
Yes.
I think that always gets you excited. You like your cars.
Yeah.
Which is a little bit different.
I do. So since I was a teenager, I've been driving JDM cars.
Right.
I think up until 5 years ago I was. It's been a while. I've been driving manual, like the actual manual sticks.
Yeah, I get
So, I love my cars.
It's a different kick, yeah?
It is.
And the question is real estate or cars, but I think real estate allows you to buy the cars rather than buying cars and not buying real estate, right?
That's correct. I think many people realize that, I'm going to buy a car first and then 5 years later I'm going to buy a property. But to be honest with you, I think buying a property first is much more of a wise move.
Yeah, absolutely.
Because you can always have that. You have that equity that's getting built up, right? Whereas cars, it doesn't. So there's a bit of that, choice-wise that you do need to think about.
So just a little bit more on that. I think that's a really cool point, and it was in the script. So the idea is of people wanting to, hey, I need to upgrade my car, but they haven't got into the property game. They don't understand the ramifications of having a bad credit because or a lower credit score.
Yes.
Talk to us a little bit more about that, because I feel like if you go out there and buy, even if it's a 50 grand car, it doesn't have to be a 200 grand car, but even a typical situation of a client that goes out there and buys that car first, or even the credit card. I understand credit cards are frowned upon a little bit too, but then again, you want some credit score.
Correct.
So how do you balance the two is my question.
So I've got a customer one time who came up to me and said, "Hey, Sarah, I wanted to buy my first home. I would like to buy my first home." So I said, "Sure." So I've discovered with that customer that she had a car loan and she had a personal loan and she also had a credit card.
Oh, God, yeah.
Now, if a customer was a high earner and she had a great repayment history, the credit score is not a problem there.
Okay.
But the problem
Could
is...
it be an advantage that they have a credit score?
Correct.
Yeah, okay.
So having some sort of credit facility is great because it proves in your credit history
that you pay.
Pay consistently, and the bank can
So
have
can you give me some examples of what would? So is it a Vodafone bill? Is it just real stuff? Like is it having, like say for example, my 18-year-old, he says, okay, how do I start?
Yeah.
So putting a car in his name or putting his bills in his name, like what is it?
I think start off with a phone bill.
Yeah, a phone bill can be towards your credit score.
Correct.
Good or bad?
It can be good. However, I always say this to the customers that your repayment history needs to be really good.
Yeah.
So if you have a bill that's on the table,
make sure
you pay on time.
Okay.
The moment you go out of that and it's consistent, it's going to be on your credit history.
Yeah, I get you.
And that's, many people don't know that.
Yeah, I get you.
They say, oh, 1 day should be okay. 2 days should be okay. That's all right. It's not consistent. No. It actually gets recorded.
Yeah, fair enough. So back to a client comes in and they have that credit card, the car loan, and they want to buy a property. What's the scenario look like there? Like how would you treat that?
Depending on how much maximum borrowing capacity the customer can have, but also the deposit as well. But to be honest with you, this is why I think purchasing a car first, especially under a car loan, before you buy a property, can be a bit of a risk, only because the car loans have higher interest.
Yes, they're doing it.
So that actually reduces your borrowing capacity by heaps.
So even as a car enthusiast and would like to drive nice cars and whatever else, you still would hold yourself back, buy within budget, get into the property market, and then start looking at the toys.
I agree to that.
Yeah. Look, personal experience, I've much the same as most people out there. I got into the car scene back in the, I don't want to mention years now because they'll give away
our age.
Yeah. But but the idea is, you want to get the nice things in life and whatever else, but you've got to plan ahead as well.
That's right. So I do understand a lot of the people wants to have a certain lifestyle.
Yeah.
I get it. And as a car lover as well, I love that too because I love my cars.
Yes.
But there are priorities.
Yes.
Right?
Yes.
There are priorities in life and there's priorities that you do have to plan.
Yeah. So if you've planned and if you've, made money through and real estate is one of the vehicles. We talk about real estate because we're real estate people. This is what we do.
Yes.
But there's other means of making money, whether it's through business, whether it's through, I don't agree with it, but Bitcoin or whatever the case may be, or shares or whatever the case is. But once you've made some money, and I'm not talking about 60 and 70 where you can't enjoy the good things in life, but once you make some money, then you can splurge yourself a little bit.
Yeah.
Yeah. So not to leave it until I'm retired, but also at the same time, not to do it too early so it stumps your growth.
That's right. So people need to understand why they want a car right now and not a property yet, because I think people don't see the value buying a property right now because they don't see the equity getting built up right now. However, buying a property is a long-term strategy, right? If you want the equity to be built up $100,000, $200,000, $300,000, that's a long-term game.
Yeah.
But imagine later on if you buy a nice car then, right?
Yeah.
I think if you could buy a 50 grand car now, later on, you could probably use that equity to buy a 100K car.
Yeah, absolutely.
There's a difference to that. And I think having that patience as well.
Patience is a virtue. Look, if someone, there's a lot of people out there and we have the lowest vacancy rate now because a lot of people are renting. And sometimes you get stuck in that, in the rut of renting. And the amounts of rent right now is ridiculous. Like I'm hearing $700, $800, $1,000 per week in rent.
Yes.
Just the rent part. Like that's outside of your living expenses and whatnot. So if someone is in that situation, which I think meets to a lot of the maybe listeners, or some of the listeners anyway, how would they be able to get out of that? Like in the sense of, okay, so I'm paying, I might have a small credit card or I may not, and I'm paying rent and my income is average, right? And I have a desire to buy a property. And mind you, something I've said before, not everyone has to buy property.
That's right.
But if you want to, there's a way.
Yes, 100%.
Now, if you don't have that desire for a loan or, I just want to be able to go away more often, dude, that's fine. It's just it's not for you.
Mm.
You know, some people say, if I bought property, I'm someone. If I haven't, no, it doesn't mean nothing.
Yeah,
You know,
no.
so this is not about I'll buy it or else. It's if you want to get ahead and build for your future, this is one of the ways you do it. So I just want to be clear about that, because I don't want it to be, you know, sort of shoving property down people's throat that don't want it.
No. So usually when people are renting and they've got a small credit card, and most Australians do have average income.
Yeah.
And I think that rate is very high at the moment.
Yeah.
So usually
What kind of numbers, just so we get some numbers out there?
I think most average income earners are probably, you're looking around close to 60%.
Yeah. Okay.
Right.
Yeah.
And people who are above, you know, $200,000 or $300,000 a year,
It's
probably
little people. Yeah. Not a lot.
The percentage is very
so
small.
what I'm trying to establish out of that question is that buying property is not only for the rich and famous.
No,
right?
no, 100% not. There's a lot of government schemes out there as well, like a first home guarantee scheme, family home guarantee scheme, even regional as well, right? And I think that's why it's best to speak with a broker.
Yes.
Only because if you're renting and you want to buy your first home, sure. But there are many lenders out there that actually consider rent payments as your genuine savings.
Wow, really?
Yeah,
Okay.
yeah. So that's actually that's a tip.
Okay.
So that's why
So if you're paying rent and paying it on time, that is
part of your genuine savings.
Wow, okay.
Yeah.
Because it shows that you can repay things. It's almost like it's similar to credit score, right?
Correct.
Yeah,
correct.
Okay. So keeping your rental ledger in check.
Yes.
Keeping it always paid on time.
Yeah.
Okay. That's interesting.
Yeah,
really
it's good. So I think that's why I always say
I didn't know
to
that.
new buyers, new home buyers,
Yeah.
please speak with a broker first.
Okay.
And get your pre-approval in place.
Yeah.
You know, things like that. So then even, you know, investors.
Okay.
Let's talk about the yield, the growth.
Yeah.
And even, you know, the strategy.
Yeah.
Do you understand negative gearing?
Yeah.
You know, just things like that. There's different buyers in place.
Yeah.
So depending on that, the topic will be very different.
So I've always talked about having the right team with you.
Yeah.
So whether it's your broker, your real estate person, your accountant, and also a solicitor that can vet contracts and whatnot. Just to sort of back up a little bit more, and I want more practical steps.
Yeah.
Only because I want to really, really sort of make it genuine, but also reachable by most people. So again, I'm renting.
Yeah.
I have maybe have a small credit card. I might have a car lease or whatever, and I may want to get into property. Now, rent investing is one of the ideas.
Yes.
And it sounds like it's a foreign word, but it's becoming a
very common thing.
Now, which is buying where you can afford and renting where you want to be.
Yes.
So if you can do the two, you've actually ticked both, right?
Yes.
Because it's like I can only afford rural property, for example, or properties which are an hour away. But I'm not going to do that because I want to work, for example, in Parramatta or in the city or whatever the case is. So I don't want to have to, you know, live an hour away, hypothetically, and commute and public transport and all of that. So there's something called rent vesting. Are you seeing that more often now in the marketplace? Okay.
What I'm really seeing commonly is rent vesting and also parent vesting as well.
Parent vesting.
Yeah.
Okay. Let's talk about both a little bit. Rent vesting.
Yep. Rent vesting, I think myself is a good example.
Okay.
So I'm renting right now.
But you have an investment.
I have an investment property.
Okay, cool.
Right. And so that gives me an idea where, okay, there's growth that's happening.
Somewhere.
Yeah.
You got a vehicle making you money.
Asset, yes. And I also living in a place where I want to live. So within the area. So, you know, I have a comfortable lifestyle where I can just walk out to the shops and things like that. So it does work two ways.
Yes.
I know many people think, oh, why am I going to pay rent when I can buy one?
It's true.
But the thing is, can you buy one where you want to buy?
Yeah.
Right? I think it's buying where you can afford and have that strategy in place where the property growth are, the yields are. You know, you got to have all that in place.
I think culturally, it's a bit of a foreign thought to say, I want to be, you know, I want to move into the place that I bought and pay it off. And it's just, you know, they used to call it the good old Australian dream.
Yeah.
Buy a house, pay it off, you know, and all of that. But I think we've got to start thinking a little bit more clever than that.
Yeah.
And it's more of an accounting question, but the financial gain you get from having an investment and claiming your tax depreciation, claiming your costs, getting some of your tax dollars back, you know, there's a lot to be spoken about that way by having an investment.
Yeah.
But it's a foreign thought, really. I mean, less so now, but it's still a little bit of a foreign thought to say, you know, I'm going to have a property, but I'm not moving into it. I'm going to have that rented, but I'm still going to rent somewhere else. Financially speaking, it's probably the smartest thing that you'll ever do, because the numbers talk really well.
The numbers
with
talk
that.
itself. Yeah.
But when they decide to say, no, I'm not going to buy it until I can buy something to move into, I think that's the hindrance.
Yes.
Yeah.
And that's why it's the same common strategy as well with parent investing.
Okay.
So
Talk to me about that.
With that as well, like, for example, I know a customer who lives with his parents. Only because the commute, everything is comfortable, the location-wise, everything is convenient, you know, even work is convenient.
Yeah.
So he's there.
So lives at home is what you're saying, yeah?
Lives at home with his parents, and he said, oh, I'm looking to buy a property to invest.
Okay.
Perfect.
Okay, so starting early whilst he's living at home, because of course the expenses are so much less at that time.
That's right. And we can explain that to the bank as well.
Yeah.
If, you know, if their living expenses as per normal, it's lower, then
do you still have to like put down that they're boarding there, like contributing to groceries or whatnot?
Yeah,
Do you have to do that?
We do. And that's part of, that's with any lender, we have to do that. Now, with parents, there is a bit of like a figure that we do need to load that they're living with their parents. Even though they're living rent-free. Yeah. We still
we have to say they're boarding at a certain rate.
That's right.
Okay.
But parent vesting and rent vesting is something that's really commonly known right now, and a lot of the people are doing it.
Does it matter if the parent does it deeper to say the parent has a mortgage or it's unpaid property or?
No, not at all. It's irrelevant to the customer's application. Yeah.
Okay. So it's just, you're living somewhere, you're not paying too much, you're not paying rent, you're paying some boarding, and now your income that you're having can be put towards. So that really means you can start really early now.
Yes.
So what's the minimum age?
Minimum age is probably I saw someone that's 21.
21.
So the recent customer was
get a
actually
loan,
22.
I think 18 is the, or to own a property, or
I think to own a property, I think it's roughly around from 21.
21. Yeah. Okay, fair enough. So to get a loan, you want to be 21 plus.
Yes.
So, you know, for the young listeners, you know, to 21, probably
21 plus age. With a stable employment, you know,
full time,
things like that. Yep. So that really.
What about a deposit? I think most of us struggle with holding deposit. We might save a bit and then we spend it, whether it's on a toy or something else, or a holiday or whatever, and we get tempted because the money's sitting there. Do you have any tips on creating a deposit, like having a deposit, how to save, like how to be able to get ahead? If I'm paying rent, you know, most people, like some people are still living at home or whatever, but most people are out there renting together with a partner or not, single income or two incomes, and the income is just enough, right? So I'm paying everything, you know, sort of, it's okay. How do I start creating that strategy of saving?
I think we need to revert that back. So when a customer thinks, okay, I'm paying rent, I've got an income, and I'm paying other bills, subscriptions as well, you know, things like that. I think that's where we need to go back and look into it.
I like that.
What kind of subscriptions are we paying? Is this worth it? Yeah. Are we actually using it? Yeah. Or even
so this
a
is
gym
like,
membership, you know? Like there's a lot of people who have a gym membership
I'm
that are
thinking things that come out of my credit card, like Shopify, you know, whatever, Amazon, like all these. Do you really need it? Spotify, that's right. YouTube Premium. Yeah. And I think we'll all fall into that. You know, we'll all
Everyone
have.
does.
And you go, oh, it's only $10 a month, it's only $15 a month, whatever. You know, the gym membership that we don't use. Yes. You know what I mean?
If you calculate that by yearly, wow, how much is that?
It's a lot.
You know what I mean? So go back to your own financials. Yeah. Am I
really go into it? Okay, go into it deeply.
That's right. Yeah. Even your phone bill. So you are paying a phone bill of, let's say, $80 a month. Is there something cheaper out there?
So a $50 deal or whatever.
That's right.
Okay.
So cut that down.
It sounds stingy, but you kind of have to do it, right?
Oh, yeah, you have to. And I think majority of my customers had to go through that because the minimum deposit you do need for investment property to buy, whether you're living with parents or you're renting, it's actually 12%. Wow. So to actually achieve
of the value of what you want to buy.
Correct.
Okay.
So, you know, it's something to
just for the numbers out there, 600,000 is 60 plus 12 is 72,000. Okay.
Yes. So that's why I think it's very important for your investment property.
Yeah.
You don't have to buy a $600,000 property.
Yeah.
There's other places you can
Yeah.
afford, right?
Yeah.
So this is why affordability is very important, because
Yeah.
you don't want to stress yourself out and then be in the,
Yeah, I've
hardship
always
position.
said you keep a little bit aside for the rainy day,
Yeah,
just in
yeah.
case and whatnot. Let's just go back a little bit more on the budgeting, because
Yeah.
I think this is where it starts.
Yeah.
Because you don't have money at the end of the month
Mm.
because you're spending it everywhere. Like, for example, and I know it myself, when we go and eat fast food, dude, it's a couple of $100. You know what I mean? Like, especially when there are a few people, even on your own, like, it'll be $50 in a minute,
yeah.
you know?
Yeah.
And there's so many food trucks now, and everyone can relate. You know,
Yeah.
you follow them around. So, I got to try this, got to try that. And it's a treat, you know, like it's a weekly treat, monthly treat, whatever it is for you. Some people daily, you know?
Mm-hmm.
Or what kills me the most, and I'm sorry for everyone that does it out there, but the Uber Eats.
Yeah.
You know, the Uber Eats, $37 just for a meal, or $50 or whatever the case is.
Imagine the
This is-
delivery fee.
So, look, I love convenience. You know, if I can afford it, I'll do it. But don't be in a situation where you're running out of dollars at the end of the week because you enjoy it. If you don't have aspirations to do anything else, doesn't matter. Do it your way. You know. So I'm very sort of cutthroat about this topic a little bit, because if you want to do something, dude, there is a way.
There is.
But if you don't want to do anything, do it your way. Like, it's all good. You know, don't worry about it.
Yes.
You know?
Yeah.
And I know it sounds a little bit rough, but I think you've got to be real with yourself, with your own finances, because guess what? In 5 years, 10 years, you say, oh, shoulda, coulda, woulda, you know, oh, look at the prices. So, and all that blame game happens to say, well, we will never be able to buy a property. I want to challenge that. You know, I want to clear the air a little bit. I want to say that you can if you do 1, 2, 3.
So this is my personal experience.
Yes.
So when I bought my first home,
Yeah.
the next property I wanted to buy was an investment.
Yeah.
But to achieve that, yes, there would have been some equity, but I didn't want to use it all.
Yeah.
Because obviously, you know, you want to keep that for rainy days, as what you said. And I've got kids as well, so for emergency, I need to have some
you
money on
had
the
kids,
side.
you had an average income. I want to paint the whole picture.
Yes.
You know, it's not like someone landed you with $100K and say, go buy a property, right? Because that's what people think.
Yeah.
Yeah?
Yeah. So that time back then I was average income.
Yeah.
I had 2 kids.
Yep.
Who
With the 2 kids. Okay.
Yeah, 2 kids who goes to school.
Yep.
And I also was paying my mortgage.
Okay.
And I wanted to buy investment property.
Okay.
Because I just felt like the timing was right.
Okay.
So, but back then when I was buying my investment property, there was no such thing about buyer's agent or nothing like that. It was just all your research, right?
It's only all recent.
So what I did was, yes, I did pull some equity out of it,
Yeah.
but just to cover off my stamp duty.
Yeah.
But to really save,
Had to push yourself.
I felt really, I'm like, why am I doing
Feel
this?
tight. Yeah, you feel tight.
You just
It's like,
feel
I want to live. I want to live too.
what am I doing this for?
Yeah, yeah, yeah.
But then if I think about the future, the long-term longevity about it, it's
Yeah.
like, oh, okay, well, it is worth it.
Yeah.
So what I really did was, and surprisingly it worked,
Yeah.
I actually changed my phone bills.
Okay.
I actually canceled the subscriptions that I'm not going to.
Wow.
Even back then I had a gym membership. I was going, but I wasn't using as much.
Yeah.
So what I did, I cancelled it. Instead, I was running around the block.
Okay.
Outside of home.
Wow. Okay. Yeah.
And then what happened was even like meal preps. I did meal preps.
Yeah. Well, now it's a thing because, you know, you're looking after
everyone
your...
was, yeah. So what I did was, even with the girls and myself, I did meal preps.
Yeah.
And with takeaways, nah.
Yeah.
Did probably maximum twice a month.
Yeah.
Even going out with the girls for restaurants, eating, probably once a month.
Nice.
Right?
Okay.
And I know that girls had
And that sounds strict,
Yeah,
right?
it sounds very strict.
Yeah.
And look, was the girls happy about it?
Nah.
Well, then, but I'm just thinking, you know,
the future.
That's right.
Yeah, long game.
we're going to deal with it.
Long game, yeah. And then you did. So what did that do to your bottom line? Like, from having very little at the end of the month in say, or end of week after getting paid and spending, how much of a difference did that make, and what kind of period of time did you have to do that for?
I think I did it for a good year.
A year?
Yeah.
Only a year?
Yeah.
Okay.
Only because, look, as having dependents and an average income earner, getting a home loan is tough
Yeah, man.
because you have a mortgage.
Yes.
So I think during that 1 year, why it took me a year, and it could take less too.
Okay.
Get me wrong.
So it depends on your income.
Yes.
So it's money in, money out, right?
Correct.
So depending on how much money you're getting into
Mm-hmm.
Your savings
Yep.
or your expenditure and what you've got to spend it on,
Yeah.
and what goes out, it's a simple equation, right? It's just that we tend to forget. And you know what's bad right now is that it's all just tap away.
Yes.
Right? You don't feel it, right? So sometimes I carry a bit of cash, and when I pay in cash, you actually feel the transaction.
Yes.
Maybe it's a little bit old school, and we haven't done it for a long time. But now you just don't think about it because you just sort of tap.
Yeah.
Sometimes you have
just
it
tap
works.
away.
But anyway.
There's a surcharge, man. You sure?
No, it's a couple of dollars, whatever. Yeah. So no, it's I think that's half the problem, to be honest. It's too easy to tap out. And of course there's the afterpay and all of that as well.
And I want to ask as well, how often would people look back into their transaction history?
No, hardly.
This is what I mean.
I found a fraud in my credit card.
Yeah.
And I only found it like weeks later. And I'm like, what's this? Like, that's not meant to be there.
Yeah.
Like, I've never bought that.
Yeah.
And then I made a complaint about it, and then made me change my credit card.
Yeah.
So, if you don't look back and don't track yourself, but I think there's apps for that now too.
There is.
Like tracking calories, tracking
spending.
Yeah.
There is. But I think ultimately it's very important where and how you're spending money.
Yeah.
Right. And just go back to even your subscriptions, go back to transaction history, the direct debits.
Where am I spending the money?
Yeah, just look into it.
I think a lot of the bank apps now, I've looked at mine a little bit, and it shows like, press this for expenses or eating out or whatever. I think it does that.
Yeah.
So I think learning back about yourself and self-reflecting of, all right, where is my money going and how could I make that better? I think that's the lesson to be learnt from that.
I think it's more of what do you want to achieve at the end of it?
Yeah.
If you have a goal, it's achievable.
Yeah.
It's hard. I'm not saying it's easy.
Well, it's like anything. It's like weight loss, whatever, relationships, whatever the case is.
Yeah.
And life is just not, sort of all dandy. Like things happen along the way and you need to be ready for it.
Yeah.
Like it's a challenge. It's really a challenge. And it's put in people's head that it's a bigger challenge than it is. Look, I'm not saying it's super easy. It's not. It is hard. It's challenging. The way Australian market is going, I call it the Tokyo of Australia, Sydney. Like if you can live in Sydney and afford to pay rent and afford to live, dude, you're doing better than most. Like because look, when you travel, you realize it more. So when you go overseas or whatever, and you say, "Oh, where are you from, sir?" and it's like, "Oh, Sydney or Australia." It's like, "Oh, okay, Melbourne," and I'm like, "No, Sydney." It's like, "Oh, Sydney," like amazing, and thank God that we can live and prosper and do what we have to do and, enjoy a meal and have a roof over our head. And I think just reflecting back on that, like we're doing okay, but, to get it,
improve.
we can improve, we can get ahead, we can push forward more. And this is not a motivational speech, but you get out of it what you put into it, right?
Yeah.
So it's the same with anything else.
Yes. And that's why, I know for the listeners here, I know people will think, oh, average income takes a year to save or, budgeting.
Too hard.
It's hard.
Yeah.
It boggles your mind too.
Yeah.
It's like, oh my God, but try.
Yeah.
It's always hard. Like even when you go on a diet, it's always hard.
Don't get me started, man. Are you trying to say something?
And I'll tell you, like I do intermittent fasting.
Yeah,
right?
yeah. Intermittent fasting is...
So intermittent fasting, what happens is that the first, I think, a week, I was struggling.
Yeah, man.
I was struggling, but I had to do it for my health condition. So I'm like, okay, if I can be in a better position myself, I guess I have to overcome it, right? And this is the same thing. Whatever you do in life, I think there is a hurdle that you have to go over.
Of course. Right? It's not meant to be easy.
Yeah, that's right. And look, when it's hard, anything
that's good comes with a struggle.
That's right.
Yeah.
So when it's hard, it will stay.
Yeah.
If it's easy, it will go away.
Yeah. Wow. Okay.
Yeah. So
that's good.
I think
one more time.
When it's hard, it stays.
When it's okay.
When it's easy, it
goes away. Okay. Yeah. Fair enough.
Yeah. So that's how I look at life as well.
Yeah.
Overall.
Yeah. Yeah. Fair enough. Look, really enjoying this, and I think there's a lot of takeaway points. Generally speaking, in the marketplace out there, where are we at with like how easy or hard to get into finance, with interest rate, like the typical questions you get asked about barbecues all around Australia. Where's the interest rate? Can I get it lower?
Yes.
Is it a better deal out there? There's some of the questions that I get. It's like, oh, so how's the market? And there's so many ways you can answer that, yeah, the market's fine. Like, it's not great right now. Like, just a sort of context of the time, July 2025. It's not, it's not killing itself, but there's activity out there. Do I buy? Do I sell? Look, I want to get your take on it. My take is always do what suits you at the time that suits you, not that you're trying to catch the market, beat the market. Do you know what I mean? Like I get flustered with, oh, I'm waiting for this. Dude, get in there. Do you know what I mean? Don't get in there at the high. They get in there for the wrong reasons, but you're better in the market than out.
And I think that comes the same thing with selling as well.
Yeah.
So if your mates are selling because they want to sell and you're thinking, like, oh, I should sell too. No. Do your own research a bit.
Yeah.
And if you still feel like, I think, you know what, after I've done my research, I feel like I want to sell now.
Yeah.
That's great.
Yeah.
At least you want to sell because you feel like you're at that pace to sell.
Yeah.
Don't sell because your mates are selling it.
Can I add to that? Only sell if you have to.
That's right.
Right.
Oh, if you can keep it, 100% keep it.
Yeah.
And there's
unless you're
too.
Selling for a better purpose. So whether you're upgrading, whether that investment is no good, it's proven itself over time. But quickly buying and selling property, I feel like you don't get the maximum out of them.
You don't get the maximum value out of it too. So I think with selling, as what you said, if there's a correct purpose for it, that's great. So for example, I have like 300 equity in my property.
Yeah.
Great. And I want to buy two investment properties elsewhere.
But you can draw back from that equity too.
That's
hypothetically.
Right. Yeah. So if it's something that you have to sell, sure. But if there's something that we can work around it, do so. Let's
go to the next level. So we've spoken about startup. Let's go to the next level to say, because that's a little bit or very important, not a little bit important. So they bought a property. They have equity in the property. So equity, just for the people that don't know, is the value of the property minus the loan. That leftover, just say hypothetically you bought it 20 years ago, 10 years ago, whatever the case is, you bought it for 600,000. Your loan, the loan now is say 400 or 300. But now it's worth, say, 800.
Yes.
So 800 minus your loan of 300, there's 500,000 there.
Yeah.
Now, that's called equity.
Yes.
Now, people don't realize that money you can use to buy another.
Correct.
Right?
Yes.
So you use the equity. It's almost like your cash deposit.
Yes.
So you don't really physically need to sell that property to get that 500 out. Am I right?
Yes, that's correct. So that's why I said, if you can keep the property while it's working around it, it's much more better. It's a smarter choice.
Okay.
Only because if you see your potential with that current property in the future for growth or, for yields and things like that, hold it.
Yeah.
Right? And that's why, speaking to a mortgage broker is very important.
Yes.
At the end of it, because maybe we...
Yes, Jua.
Maybe we have to, refinance. The whole loan to withdraw equity. Now, many people
to maximize the loan.
Yeah. Many people don't understand as well. Like, for example, if you had a property that's an owner-occupier that you're living in, equity is there. Yeah. You want to withdraw that to buy an investment property.
Yes.
People think that, but I'm withdrawing this from my property that I'm living in. How can I buy this? Yes. You can add the deposit to purchase your investment property. And
so you pull out the deposit. You don't have to have it in cash.
That's right.
You can pull it out from that house or that unit, whatever.
And we can actually use that equity cash out portion for, if it's investment purpose, we can actually even negative gear that as well.
Wow, okay.
So that's why, speaking to a mortgage broker is important at the end of the day.
So you can borrow up to 80% of the existing, just to get technical a little bit, 80% of the equity to buy your next property.
That's right.
Right? So as long as your loan ratio is up to 80% of the value of the property, you can use that and go again.
Yes.
Is that true?
Yeah.
Okay. So so that's someone that owns a property and wants to go out there and invest for the first time or the second time. I get it sometimes. I don't get it all the time, right? That And most Australians, well, some do, the clients I deal with, because they're landlords and people that own property and love property and whatnot, they tap out. So they bought 1, 2, 3, some more, some less, and they're like, the bank won't talk to me anymore, right? So, whatever my income or whatever the case is, what do they do?
Okay. I actually get this a lot from investors.
Okay.
Now, when you buy a property under your individual name, with your income, 1, 2, 3 property, bank says, oh my God, you have too much. See you later, right?
The risk.
There's a risk to it.
Yeah.
However, now people are starting to churn themselves into a trust.
Like a family trust.
Yes.
Yeah.
If you churn yourself into a family trust or a company trust, that actually gives the opportunity to buy more properties under a trust.
Okay.
Because trust itself is a running.
And the family trust could be yourself, your wife.
Yeah. Anyone, your family, your parents, it can be anyone. With
could be
brother,
relatives.
sister.
Yeah. Okay.
Anyone who's on that paperwork.
Yeah.
Good to go.
Okay. Yeah. So they can create a family trust, and that trust goes out there and buys property. Is that what you're saying?
Yes.
Okay. So it's probably the power of multiple incomes, and it's a different entity.
Yeah.
And that could help it.
I think entity makes a huge difference.
Okay.
But I think this is why when my customers buy their first investment property, I do mention about trust.
Okay.
Even they're single or they're single with dependents, it doesn't matter. I do mention about it only because there is a maximum threshold. If you buy a property under your individual name.
Okay.
Right?
You reach a limit.
Yeah, you do. That you reach a limit.
Yeah.
So
I think it's a question more to the account and the individual needs.
That's
I'm
right.
not
Yeah.
because whilst I have done a trust in the past, it came with positives and negatives, and then it comes to land tax and rates, and it gets technical, capital gains and all
discretionary
sorts.
trust, it goes all over the place. Yeah.
So I think have the right accountant with you. But just as far as a broker's concerned, when it comes to buying that next property, when it comes to more so they're tapped out and they need from one bank, and the broker can go out there to other lenders, I guess, whether it's other banks or non-bank lenders. Is that right?
Yeah. So I think many people think that they got to stick with one bank.
Yeah.
No.
Okay.
I think now
there's no loyalty in the game.
That's right. There's no loyalty with banks. I'm sorry, but no.
They don't like you any better. They probably like you less.
Yeah.
If you have too much, because you're a high risk client, correct?
That's right.
Yeah.
So I think people think refinance is hard.
Yeah.
Or you have to stick with the same bank.
Yeah.
No, that's not true.
Yeah.
Like even myself.
Yeah.
With that one property that I had.
Yeah.
I didn't stick with one bank.
No,
because rates
moved it. Yeah,
rates fluctuate, and plus, if you're a loyal customer, yes, and there's another bit of a little discount you can get. But is that going to satisfy you? Some people it doesn't.
Yeah. So I've said this before, whereby if you're with a bank, and each to their own that way, sometimes picking up the phone and speaking to the bank and say, hey, lower my rate or I'm going to move, that gets you sometimes up to 0.5% or 0.25% off.
5 basis points,
right?
yes.
Yeah. So they do a bit of a discount just from that phone call. And people don't do that phone call usually.
No.
But just to be fair in the conversation, I feel like if you refinance too often, it can be harmful as well.
Yes.
So yes, refinance, but I don't know if there's a year time, like 5 years, 3 years, but not any more than that, because too many applications is no good too, correct? Like do it, but don't overdo it. Would you agree with that? Or?
Yeah, I do agree.
Yeah?
So one of my customer actually refinanced their property once a year.
Wow.
Different banks once a year.
Wow, really?
But I think what I've noticed that the reason why refinancing...
Does that work for her though? Like,
no.
Okay.
This is what I'm trying to get into. So when a customer is refinancing often, let's say once a year.
Yeah.
So that customer did once a year. What happened was you'll keep extending the loan term.
Yeah.
Right? 20,
You're restarting that 30 year.
You're restarting that 30 years.
And is it a thing that they say the first 7 years or 10 years you pay the interest portion and then later you pay is that a thing?
So
like then the actual principal gets paid later and they collect the interest first. Is that?
I think that really works if you're on an interest only.
Oh, okay, yeah.
Yeah. Interest only.
So just to clarify, there's principal and interest loans and
interest only. Yeah, that's right. So Yeah, once a year. So what I did what I did say to the customer was, all right, after this refinance, we're not doing anymore.
Yeah.
I said, we're not doing anymore.
Every year.
Yeah, every year. And
Wow.
I'll tell you what, why she did it every year
Yeah.
is by not even 25 basis points from her interest rate that she
She-
wants to
to
save. It was
reduce.
actually only like 15, 20.
Yeah.
But is that really worth it? You know what I mean? Right now, due to the
Depending
RBA,
on the size of the loan, that could be a couple of $100 or a
That's
few
right.
$100.
Yeah, that's right. So, right now, RBA has held the interest rate. Thank you.
Yeah. That was a shock,
It
right?
was.
Because
It was.
everyone thought
It's going to go
it's
down.
going to go down.
Now it didn't. It's on hold.
Yeah.
So now I've seen that many customers are still on the low sixes interest rate.
Okay.
Okay.
Yeah.
They think, oh yeah, 6.1 or or 6.09. That's a normal average. No. Go and speak to a broker
Okay.
or come and speak to me. Right.
Yes.
I can actually help you to reduce that
Okay.
massively.
Okay.
Yeah.
Okay.
So the banks itself, the lenders itself, they
So what are we
have
seeing
competitive
numbers-wise out
rates
there?
as well.
So what's the rates now? Like, what should people be getting?
So,
And if they're not, they should see a broker.
yeah. So investment wise, I'm seeing around 5.7,
Okay, under 6. Okay.
5.6.
Okay.
I'm seeing around that mark.
Wow.
Depending on which bank.
Okay.
Because
and how strong you are as an applicant.
That's right. Yeah. And it's more of how you polish the application.
I love that. Yeah.
Yes.
Yeah.
Because,
So I find that that's the biggest advantage of using the broker, because you can go out there to the bank and spill the beans and maybe spill too much or not how to articulate the deal.
That's right.
And guess what? They'll say, thank you, but no thank you.
Yes.
We're worried about you. But if it's almost like coming to see a shrink. Like I can come to a broker and spill the beans, but you'll go, I don't want to know about that kind of thing.
Yeah,
you know what I mean?
that's
Like,
right.
let's focus on this. Let's focus on that.
There's a lot of people say, oh, but if I go to a broker, there's a lot of paperwork. I said, that's true.
Less than the bank, I guess, or no?
The thing is, if you walk into a branch or you see a home lender in one bank, yeah, sure. Maybe the documents will be less than a broker.
Because they have your profile or whatever.
That's right.
Yeah.
But have you thought about all the documents that you actually provide is the basic standards?
Yeah.
And on top of that, the brokers do ask a bit more.
Yeah, they want to know your
reason why
income,
is
your pay
because
slips. Yeah.
We have access to 30, 40, 50 plus lenders out there, right? So we gather all those documents and we shop, right? And we actually polish the application with the documents that we want to present to the bank.
Okay.
So that's why it's a bit of a difference.
So when one says no, you know the other. And you have an idea who has an appetite for what.
Yeah, 100%. So understanding policy, the bank policy well is very important.
Yeah. And who's out there is more ready than others. That's really interesting.
But I do want to ask you a question as well. Like,
yes.
With property wise, what kind of movement can you see in the market?
Ooh, tough one. Look, it's a typical situation every time, right? I feel like whenever there's a change in the interest rate, because it is hugely affected by that. Look, there's other factors, which is immigration, people coming into Australia, out of Australia and all of that, students, otherwise, because that affects rental yields and affects property values and what sort. I find that whenever there's a movement in the interest rate, the market just moves. So it will move either upwards or downwards, depending what's going on. So sometimes it will be a situation where the interest will drop, more buyers get ready, you can lend them more, they go out there and spend a little bit more, and then guess what happens? Property prices start incrementally growing as well. I have a client right now. We rent the property out for her, and she says, look, I want to upgrade the property. I'm buying with a partner. She's getting married and all of that, and she wants to sell her current investment property. Look, my advice was like, if you can hold on. She's like, no, I want to sell. I was hoping for that interest drop so we have more activity so we can achieve a better price for her.
It's disappointing.
Yeah. So I said, look, it's fine. If you want to put it on the market now, you can. Again, most likely the next interest rate drop will happen, and that will create more activity in the marketplace. Not to sound like the typical person. Look, I am a positive guy, but I'm not always positive about the market. Yeah. So just to take you back a little bit, since COVID, and because it's a huge sort of timeline in everyone's life.
Even the rates back then.
Right, the rates, everything else. So I've been reluctant. So we do a lot more project marketing work. So we sell projects, not just individual properties. Since COVID, I've sort of drew back on that. After COVID, I remained reserved about that, and I didn't have the confidence in selling a property off the plan and telling you straight in your face, hey, this is going to make money. I didn't have that confidence level. So I've always was reserved about that for a very, very long time. Look, it's been a little while now, and we've had some personal circumstances at home and whatnot.
Yeah.
But now I'm at a stage where I'm truly optimistic of what's going to happen over. Look, and I'm not going to say 6 months, I'm going to say over the like 4 to 5 years, 3 to 5 years. So I think the market will move in the right upward direction over the next few years to come.
Yes.
Why do I say that? Look, the economy now, whilst it's a little bit low, it's stable.
Yeah.
And we live in Australia in one of the safest places, right? So I get approached all the time from Dubai to sell Dubai properties. And they're like, oh, why don't you sell it? Look, no disrespect, but I've got good properties here. Like, why would I kind of thing? You know what I mean? Unless you give me a really convincing reason why I should be investing overseas, I don't have the need to, you know? Oh, we've got good yields, you know? Look, if I want to do it just for the sake of saying, oh, I've got to Dubai, like whatever, you know, that's another discussion. Similarly with Bali, look, unless I'm going to retire or it's a lifestyle change or I want to stay there 6 months out of the year or 3 months, it becomes a holiday purchase. It's not really an investment strategy. And I feel like you do that later when you have a little bit, do you know what I mean?
Yeah.
So, but the strategy changes dramatically each to their own. You know, people's motivation to why they buy or don't buy really depends on their personal circumstance, not mine.
Yep.
Do you know, like, it's not what I want to sell you kind of thing. It's like, you tell me what you want out of
I've
this.
seen a lot of people as well, like they always say, I want to buy now.
Yeah.
This is the right time. So this is why I'm saying, like, I know the RBA has held the rate.
Yeah.
I get it. It's disappointing as a home loan owner too. It's disappointing.
Well,
but
people that have money invested in the banks as
That's
cash,
right.
they don't like that. They want it to go up, right? I'm not one of them.
That's right.
Just saying. A lot of people do.
So that's what I mean. Like, if you're around the low sixes rate, come and speak with me.
Okay.
Let's see some refinance options. And let's pull some equity if there is equity.
Yeah.
And if you want to invest right now, let's do that.
Let's do
you know?
it. Yeah.
There's all sorts of ways. But without
prep.
speaking to a broker, it's hard.
To do the prep work. Because
That's right.
even from seeing you, it's not within a month or within a week they're going to buy.
No.
Could well be a month.
Yeah.
To prep the paperwork, get the strategy in order.
If a customer calls me today and say, hey, Sarah, I want to refinance, draw some equity out. Okay, cool. This is what you want.
Yeah.
But let's look into it.
Yeah.
And if I think this is going to take 2-3 weeks' time, okay, that's fine. Let's prep in between. And then once we get to the third week,
and the quicker they respond to you, the quicker you're going to get things out.
100%.
So if you ask for a statement or a pay slip. So what are some of the main things people need to have ready to be able to see a broker? So I want to come and see you to do a refinance. What should I be prepping myself to come and see you with? What would you like me to, if I was an A grade student and coming straight, what do you want?
I think I need to see pay slips.
Pay slips?
Yep. Bank statements.
Bank statements.
If you have any credit facilities, I want to see all those statements as well.
Yep.
Now,
other loans,
I think,
leases.
Other loans, leases, sure. But I think document is not the main thing.
What is it?
It's actually your mentality.
Oh.
Yeah.
Deep.
That's right. So it's more of, all right.
Are you really ready?
Do you have an idea what you want out of this? You do. All right. Talk to me.
Okay.
Talk to me about it.
Okay. What are you trying to buy?
That's
is it realistic? Is that what you're saying?
Is there something that's holding you back? For example, I feel uncomfortable with this. Like, be honest, you know, I don't feel comfortable with this bank because I had a previous experience or.
So avoid this.
That's right. Whatever it is, you know, come and speak to me. Like, talk to me about it. I'm open about it, you know. And the other thing is, well, I know you just mentioned that customers needs to be responsive with the documents that I request, right?
Yeah.
Also, on the other hand as well, brokers need to be responsive too.
Okay, back to you. Of course. Yeah.
Brokers needs to have a good communication skill.
So if your broker's not getting back to you in a timely manner,
that's right. That's
look
just
for another.
That's just going to leave the customers feel anxious, questioning.
Yes.
I don't like that.
Yeah, fair enough.
Because I'm a home loan owner too.
Yes, I get you.
And if I think about, you know, as a customer myself, I don't like that.
Yeah, fair enough.
So it's very important, communication.
Yep.
Yeah.
Look, I love that, and I think you've left it with a good note.
Yes.
In the sense that communicate. I love the fact that you got a plan.
Yeah.
Budget. Be ready, mentally ready.
Mm-hmm.
It can be challenging.
Yes.
It's not going to be an easy road ahead.
As I said, hard things will stay.
Yeah.
Easy ones will go away.
Go. So I love that, and one of the last takeaways is that it is possible.
Yes.
Yep.
Of course.
So everything is possible if you put your grit to it and make it happen.
Yes.
And I thank you for your time today.
No, thank you.
Really enjoyed that, and hopefully we'll have more topics to talk in the future. Maybe we'll do a car podcast.
Yeah, maybe we should. What car have we driven before?
What was your favorite? What was it? Yeah.
Look, I think, for the listeners as well here.
I'm a bit old school now. I'm driving classics.
Oh,
I'm no longer into the JDM scene.
So I'm still with JDM. I still love my JDM.
It's the age gap. Yeah.
But I think for all listeners too, if there is a certain topic that you want us to discuss, I think it's
reach out. Please reach out. Let us know.
Yeah.
There'll be this will be posted. So it's currently live on TikTok, but later will be on so later it will be on YouTube.
Yep.
We'll have little reels of the important points on our social media and yours.
Yes.
Your social media is on Instagram
and Facebook.
And LinkedIn.
LinkedIn as well.
Okay. And CS Duo. So CSDUO, and you'll find Sarah.
Even on Google as well now.
So. On the Google? Okay. Yeah. So Sarah Lee. Not the Sarah Lee ice cream. I had to push that.
Oh, look.
So I had to push that in.
You're going to do that. Don't do that. Oh.
Sarah Lee, CSDUO.
School, they used to call me that, cheesecake. Hey, cheesecake. I'm like, oh, my God. Yeah,
all righty. Thank you. Really appreciate that. Thank you.
See you soon.